While we are having the stay in the UAE as an expat, we should always try to maximize our savings and investment opportunities which this country has to offer. Usually, the best known benefit of living in the UAE or the wider Gulf region is always the tax-free income that is hitting your bank account every month. However, because of the addiction of monthly salary, normally people are always ignorant of the fact that this country, this great country actually has to offer a lot more than just the monthly salary. So what else are your options apart from your monthly salary here in the UAE for growing your wealth and becoming financially independent? First and foremost, the liberal atmosphere this country is offering is always giving a boost to your creativity. This creativity will in turn give you more time and more opportunities to make more money and grow your wealth. Moreover, if you invest in a property here in Dubai and if the property price increases, appreciates, you don't have to pay any property taxes, which is not the case anywhere in the world. Although there are some service taxes which are implemented and imposed in this country, moreover there is VAT as well, but still if you compare this with a country like let's say Canada, or let's say Europe, the countries in Europe, or let's say US, or even some countries in the South Asia, they are not as much as those countries have imposed. Moreover, it's justified as well because of the facilities this country is offering. Coming to the topic of this video, which is about investing in the US stocks, it is also important to note that there is no extra taxes that are imposed in this country. Let's say if you're investing from your home country, you might get extra taxes imposed to you if you're investing in the US stocks. But if you're investing in the US stocks from the UAE, you don't have to pay any additional tax on top of what US government is already taking. And while you're investing in the stocks, people always tend to forget about dividends. They only check the prices pre and post of investment. They forget about something called dividend. So what is dividend? Basically, the company which is listed on the stock market, they have the obligation to disclose their profits and losses, whatever the case is, to the general public. And the general public, like you and me, they are the stakeholders in the companies as well. So whenever they have some profits, they might also share the profit returns with the shareholders. At this point, dividends become very interesting because those are the times when you get money hitting your bank account. Now that money can come every quarter, let's say every half year, every year, or let's say every month. It depends on the company how they are structured. Before we go into the video, I should tell you that this dividend investing is not as simple as it looks like. You have to keep investing, you have to keep on learning, you have to keep on studying this, because sometimes a good company is not paying off the dividend, and sometimes bad companies are also paying the dividend. So it all depends on how you are looking into things. In general, if you look at the past history of the company, it gives you a good indication that how the dividends would look like, but it's always the case that the past performance is never the guarantee of the future returns. So I tend to invest in blue chip companies. What are blue chip companies? Blue chip companies are the ones which are the top leading companies in the stock market. These are the companies which are paying, also most of the time these are the companies which are paying the good dividends as well. Now these dividends are not guaranteed, as I mentioned before, but if you see the trend, if you see the multi-decade old trends, it might show you that it's always good on dividends and it's always growing on dividends. Now the companies which are growing on their dividends, they are called as dividends aristocrats. I have listed down some of those companies. There is a link in the description. You can go ahead after the video ends. You can see for those companies which are called as dividends aristocrats. The reason for them to be called like this is that they have been growing consistently their dividends throughout the years, maybe for 20 years, maybe for 30 years. These includes companies like Coca-Cola, Procter & Gamble, 3M, etc. From the list below, you can see these companies are growing dividend on the multi-year basis. Even some companies have been growing the dividends for 60, 70 years. So you can see, you can have a detailed look on this list of companies. As mentioned before, the dividend income is not always guaranteed. The dividends are not always guaranteed by the companies, but it depends on their performance. Even with the best of performance, sometimes the companies withhold the dividends. There are many reasons for doing this. Don't take this video or the stocks I talk about in this video as investment advice. I'm just doing this for educational purpose. Now we've talked about dividend investing. Dividend investing is simply picking those stocks to invest where they are providing dividends every, let's say, quarter, every month, or every year. But there is one step ahead for dividends investing, which is drip method. Drip method means that whatever dividends you are collecting, you are just reinvesting those dividends. Basically, let's say if I invest in Apple and every quarter it's giving me some money for the dividend, I'm gonna just reinvest that money in dividends. I'm gonna talk about one of the stock which I've been I'm not investing personally, but I've seen this stock and it's its growth over the past 20 years. But before that, I'm gonna show you one of the app which I'm using to invest in the stocks and using the drip method at the same time. I'm using Baraka here. This app is really nice. By the way, if you want to open the account with Baraka, I'm gonna give you a referral code, and if you open the account using my referral code, you will get $25 through that code. Now let's say if I show you here, what does this mean, what does this drip means. So if I go into the dashboard, it will show me this under the invest, it shows me drip. If I go to drip, you can see I have just enabled the drip on all the stocks that I have. What it means is I'm investing all the dividends that I'm going to receive back into the same stock. I can stop doing that, I can again start doing that. So I have currently enabled that drip investing so that I can keep on reinvesting all the dividends that I receive. Now I'll show you one of the calculations with one of the stocks. Let's say if 20 years ago, if somebody has invested in that stock, let's say $5,000 somebody has invested in that stock, over the 20 years period, how the stock price behaved and what are the gains based on different scenarios. So let's talk about one of the stock, which is Home Depot. Home Depot was 32 USD while in 2002 the stock price was $32, and then in 2023 right now the stock stands at 295, although the max it has gone to 415 as well, but I'm talking about right now, what is the value right now. So currently it stands at 295, and the capital appreciation overall per annum is 11.76%. So over the let's say over the 20 years period, the capital appreciation we have received for this stock is 11.76% per annum, which is really nice. So let's say if I invested 5,000 USD in Home Depot stock, which was $32 at that time, and now it's $295, the total amount that I would have got is 46,093 USD, which is a huge amount compared to what I have invested, which is not bad. Now I will use a website. I'm again linking that website below. You can calculate further. Now what I'm going to calculate is that, let's say if I have this 5,000 US dollars, I have invested that amount, and the dividends that I have received from that stock, I'm not gonna use them. I'm not gonna let's spend those dividends. I'm gonna just reinvest that dividend. If I'm gonna do that, then this amount is going to be 92,603 US dollars. Means if I'm gonna just leave that $5,000 invested, whatever dividends I'm getting every quarter, I'm gonna reinvest that dividend as well. The total amount at this point will be 92,603 US dollars. Now the total dividend yield right now for the Home Depot is only 3%, but if I'm gonna think about what I have invested back 20 years back, this is going to be a huge number. I haven't calculated that, but if somebody wants to invest right now, the dividend yield is around 3%. Now there is one step further to this. Whenever we are investing, we're not going to invest just one time and then leave it like that. I'm never going to go investing like that. What I'm investing is every month or every year I'm investing certain amount in certain stocks. For this, take an example. Let's say if I'm investing in Home Depot in 2002, let's say I invested 5,000 US dollars in the beginning, then every year I'm investing 1,000 US dollars every year. That will make a total of, let's say, 5,000 plus 20 into 1,000 equals $25,000 of investment that I have done in Home Depot. This, if I'm doing with drip, if I'm investing $5,000, if I'm investing every year 1,000 extra dollars for the last 20 years in Home Depot, plus I'm also dripping, means I'm always in reinvesting the dividends. This amount now comes to be 213,318 US dollars. So you can imagine investing the first amount, the initial amount, investing the dividends that you received, and then also dollar cost averaging. You are always investing in that particular company every year. You can do it every month, you can do it every year. I have done it just for the sake of simple calculation. I have done it every year. This will make you 213,000 US dollars on the original investment of, let's say, 25,000 US dollars. So this is a huge amount that you can earn through dividends and dividends reinvestment plan. So the point is that Don't miss out while you are in the while you are living in the UAE. Open the account with any brokerage app. Let's say I'm talking about Baraka in this video. You will get $25 as well as a referral bonus if you use my link in the description below. At the same time, don't forget that many big companies also fall, or let's say they fail. Take an example of Nokia, take an example of BlackBerry, take an example of Lucent. There are many such examples where the stock price is hammered over the period of, let's say, 20 years. So it's not that simple. If that would have been so simple, everybody would be investing. But if, let's say, you cannot pick the company, or you don't want to pick one single company, you can invest in the ETF, or let's say you can invest in the whole stock market, which is also available through Baraka. You can invest in a whole lot of ETFs. If you want me to make videos on ETFs, just let me know. I'll try to make as much as possible the videos just to educate you guys. Towards the end of the video, you can see there are two videos I am showing. This is the car buying tip. I have just made the video a while back, and then there is a platform I'm using for investing in the real estate of Dubai. You can see that video here as well. How did you like the video? Please let me know. Thanks for watching the video. Bye bye.